Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028201. He is a gentleman. He is a scholar. He is
Tyler Crawley.
Well, it was a dreary Monday, and unfortunately, the bond markets were kind of the same. It was not a good day for rates. Now, 2 days in a row, because Friday wasn't that great either, but there's a lot of data coming out this week, so it's hard to say. It's hard to say where we're going this week, but starting off Monday does not look very good, but here we are. Welcome, everyone, to the Tuesday edition of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Crawley, of course, loan officer at Town Bank Mortgage, right here in Wilmington, North Carolina, where we break down the top stories impacting mortgage rates every single weekday, unless, of course, I'm sick, on vacation, or it's a Azalea Festival week. And it's neither of those. So here we are. So, not surprisingly, we had Iran, an update from Iran kind of directing the day. That was ruling the day, driving the day, however you want to say it. That was the impact of the day, is what was happening in Iran, or I should say not happening in Iran. So the big news last week, if you remember, was the potential possible ceasefire that could be looked at as bringing about a bigger ceasefire or an overall peace agreement between the two countries, the U.S. and Iran. Well, I guess three countries, U.S., Israel, and Iran. And that slowly, you could see it falling apart at the end of last week. Friday, we were being told they were waiting for a response from Iran. We didn't get anything. I didn't see anything over the weekend, which was not a good sign. And then Monday morning, we saw that they had sent like a counter proposal. And the president did not like it. He was on Truth Social. And I actually don't have it pulled up. I should have had it pulled up. But he basically, I think he called it totally unacceptable in all caps. He was not a fan. And basically, I think he actually said that he didn't read it. It was so bad, he didn't even read it all the way through, which I was like, you maybe don't want to admit that. But he did note that it was totally unacceptable in a post on Sunday night, hours after Tehran said it had submitted a new proposal following another tense week in the Persian Gulf. The president tweeted, "I've just read the response from Iran's so-called representatives. I don't like it." So he didn't like it. And then this morning, the president kind of doubled down, arguing and telling reporters that the ceasefire was on, quote, massive life support. He then called the proposal a piece of garbage, saying he didn't even bother reading the entire document. So, I mean, that's kind of par for the course with Trump. He's always going to kind of exaggerate. So his first tweet, he was a little less grandiose or boisterous, maybe is the term I'm looking for. Now he's like, piece of garbage. I didn't even read the whole thing. It was so bad, totally unacceptable. Massive life support is what the ceasefire. So obviously markets did not like that. Oil prices rose, and I believe equity markets are actually up, surprisingly. You cannot knock down equities, man. They will find any reason to getting closer to new highs. So equity markets were up, but we did see, like I said, oil prices did jump, closing out Monday. Brent was almost $105 a barrel, and crude was just over $98 a barrel. So obviously, oil markets not happy. Equity markets, whatever. They're doing their thing. But we had the yield on the 10-year Treasury jumping almost 5 basis points, so solidly above 4.4%. And then, and this is probably more in response to what happened on Friday, we did see mortgage rates rise on Friday, but we saw no change with the 30-year fixed, that jumped 7 basis points. Because as I've said before, the 10-year moves a lot quicker than the 30-year. Unless there's like a real big move, you'll always see a slight delay with the 30-year fixed. So Mortgage News Daily had the 30-year fixed rate jumping 7 basis points to 6.49%. So we're back to almost 6.5%. And then, like I said, a little bit of a jump in the 10-year yield. And so that's probably reflecting both what happened on Friday and what was happening today is what we're seeing reflected in that Mortgage News Daily. So it looks like we're not close to an agreement. That was really the cause of the drop is what we saw yesterday. So that's why I said probably not going to be a good week. We do have a ton of economic data, though. I mean, it's a lot. So we are going to get to existing home sales. We'll talk about that. But today we got CPI, always important, inflation data, always going to, when there's not a war going on, it's usually one of the most important reports. Total household debt. Then we have a 10-year bond auction. Those are always important to show what the appetite is for the 10-year bond in the markets. A weak auction can be a bad sign that we're going to see rates rise. And then at 2 o'clock, we're going to get budget data, the monthly budget statement from the U.S. government. And because it was April, which was tax month, we are expected to see a slightly under a $200 billion surplus. One of the few months where we actually run a surplus with the U.S. government. So it's a busy Tuesday. And then on Wednesday, we got PPI and a 30-year bond auction. On Thursday, we got retail sales, jobless claims. And then on Friday, we get some manufacturing data with a New York Empire State Manufacturing Index report. So a busy week. And on a normal week, you'd see a lot of movement with bonds. But because, as I keep saying, Iran is the driving force, we could get like a great inflation report. But if all of a sudden chaos erupts or violence, things get worse in the Middle East, then all of a sudden rates are going to go up. It doesn't matter that we got a good CPI report because these reports are a month behind. So here we are in May looking at April's data. When you have a geopolitical event happen right now, it almost renders all of that data moot because it's like that's another time. It's like that great quote from The Rock where Nicolas Cage, comes home. Or he's like a bomb. He's a bomb. What do they call him? Who are the people that diffuse the bombs, whatever they are, whatever bomb diffusers? and he like take care of an anthrax one. It's like a horror. He almost dies. He gets home or he's been home and his girlfriend comes home and he's just distraught, very depressed. And he's like, oh my gosh, like, the world is going to hell with a handbasket. He's like, anyone that would, think about having a kid this day and age, should be considered an act of cruelty. And then his girlfriend goes, well, I'm pregnant. And he goes, wow. And she goes, you didn't just mean what you said about bringing a kid into the world as an act of cruelty. And he says, well, I did at the time. And she says, you said it 30 seconds ago. And he goes, well, a lot's changed. And it's like, that's 100% true for this data. It's like, all right, we got April's data, but here we are in May and, we're dropping bombs on Iran again. Well, that April data is useless because we are living in a very different world than we were 30 seconds ago. That's from another movie too, isn't it? That was from Training Day. That was from, not Training Day. What's the movie with Kevin Costner? Draft Day. I just watched it because we had Draft Day. I like to watch movies that are timed at the same time as it is on the calendar. So like when Draft Day is actually happening, I like to watch the movie Draft Day. And then when it's like spring, I like to watch spring movies. I know. It's something I do. I don't know why. All right. Speaking of oil, we are now hearing that President Donald Trump would support the idea of suspending the federal gas tax, which apparently has never happened since the federal gas tax was implemented in 1932. It's never been suspended. People have talked about it. States have done it, but we've never done it. I just think it'd be like hard to bring it back. Like once you get rid of it and people are like, oh, this is nice. I mean, it's only 18 cents. The problem is it's only 18 cents. So, I mean, think about how much revenue that generates, and it's like 18 cents a gallon. I mean, it's mostly state and local is where the taxes are coming from. So the 18 cents, actually, you know, what is it? Let me break that down. Look it up. North Carolina gas price breakdown taxes. All right. Yeah, so there's a 41 cent state excise tax, a 25 cent inspection tax, and then the 18 cent federal tax. So, yeah, I mean, you're looking at 66 cents is North Carolina, and then you got 18 cents. So I don't think it's going to be a big impact. I don't think it's going to go anywhere. Senator Josh Hawley of Minnesota has said, is it Missouri? No, Missouri. Yeah, I think he's Missouri. I don't know. I haven't heard that name in forever. I'm like, Josh Hawley. Used to hear that name a lot. You don't hear it as much anymore. He said, yeah, he'll put some legislation forward. Democrats might get on board, so we could have a bipartisan bill, but I just don't think it's going to do much. I mean, gas prices are up, according to AAA, $1.40. 18 cents? I don't know. I don't think that's going to have anywhere near the impact they think it's going to have, but we will see. But it's getting put out there. I mean, it could help with inflation, I guess, a little bit. All right, before we go, existing home sales data, we did get that. Existing home sales increase, so it was good, but it was a very tiny increase. 0.2% to a seasonally adjusted rate of 4.02 million. That was less than the 4.06 million that economists were expecting. So it was an increase, but smaller than they were expecting. Sales increased in the Midwest, in the South, and were unchanged in the Northeast and declined in the West. Year-over-year basis, sales rose in the South, flat in the West, and fell in both the Northeast and the Midwest. The South now makes up 46% of all existing home sales in the country are the South. Lawrence Yun, chief economist over at the NAR, said despite mixed macroeconomic signals, including a record high stock market and historically low consumer confidence, home sales were modestly boosted by the continued improvement in housing affordability. Mortgage rates are lower from a year ago, and average income is outpacing home price gains. You know, it's kind of funny how when you see like home price gains slow like they are right now, everyone says, oh man, this is the worst ever. But it's like, well, that's how you get affordability back. Is that home prices growth slows, incomes continue to grow, and then all of a sudden homes are more affordable. Jan added that inventory still remains tight. Multiple offers, though not as intense as a few years ago, are still occurring. Nationally, inventory was 1.47 million units. That was up just under 6% from March and was up 1.4% from a year ago. Month supply rose slightly to 4.4 months, up from 4.2 the previous month and up from 4.3 months 1 year ago. And then, like I said, sales price, $417,700 was the median home price, up 0.9% from 1 year ago. That is the 34th consecutive month of year-over-year price increases. Probably going to go negative based on the slowing that we are seeing. I don't know when. Could be a couple months. Could be next month. Could be 2 months. Who knows? But it's slowing. We're now under 1% year-over-year growth. Housing affordability registered at 110, up from 101.4 a year ago. So more affordable. Sorry, more affordable. And that was thanks to a jump in all the regions. Almost 5% in the Northeast, just under 6% in the Midwest, 9.6% in the South, in the West, 12.5%. So even though a disappointing report in that sales were not as good as we were expecting. The fact that we are seeing affordability improve means that a couple months down the line, we could see that number jump because affordability is getting better with housing, at least nationally. Individual markets are individual markets. All right. Like I said, it's a busy day today, so we have a lot. We are going to have a lot to get to tomorrow, which we will be here tomorrow. You guys enjoy your Tuesday. We'll be back here Wednesday for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. You buy real estate and wait.